Well, welcome everyone to the financial fitness edition of our webinar series here at Hobbs Group Advisors. My name is Thomas Manley. I'm one of our financial planners and advisors here, and we are excited to bring this to you today. I know we've got a handout. This is going to be recorded, and we are just going to get you thinking about what's important to review on an annual basis, even if nothing changes, right? If your life is just coasting along, what are the things and aspects of your financial life that you should be thinking of, kind of in relation to, your family, your health, your job, just anything you can think of that is a moving part in terms of your finance. So we're going to go ahead and move forward. I know we've got some people joining, but these are just some disclosures as far as kind of our affiliations, and so that's for your information, but not something that we're going to talk about as we go through. So what's important is gauging where you are now, right? So each year, this is an exercise that we do with all our clients, and it kind of becomes a habit of theirs to just review your financial situation, right? If you don't have an advisor or planner that you work with, this is going to be something that you're doing for yourself. And some of us are organized to do that, but others need some encouragement. But you're going to want to know what's changed, what's stayed the same, and what do you want for the new year, right? And the beginning of the year is a great time to do that. This is going to be maybe an easier exercise than joining a gym and starting to get physically fit. We can start by getting financially fit, right? So we'll move on, and we're on kind of the 9 areas of your financial life that you want to be thinking about, right? That's family, goals, business, work, your health, money, your estate, if it's applicable. What kind of legacy do you want to leave, and how does the tax code apply to that, your retirement, and then just your future in general. So think of these as the subjects, right? The areas that you really want to focus on. And as we drill in, I don't have a sweatband to wear, but we're going to get financially fit today. So try to keep it light, but I didn't bring workout clothes. So we're gonna go ahead and move in. I mentioned this, I believe, at the beginning, but this is the handout, right? This is what this presentation was built off of. It's a 2-page document. You kind of go through it. It's the checklist, right? So if something applies to you, check yes or no, and then make a note about it, right? You're going to review this, and if we end up kind of discussing your situation, then this is something that's great that you can bring to that conversation, because it goes through all those 9 areas, and some good questions to ask yourself if you don't have a change, right? Because that's the whole thing. You want to review this and just make sure that you're on top of it and know where you stand, even if you haven't changed jobs or expanded your family or received an inheritance, whatever it may be. So this is just something good to have on hand, and it doesn't have to come together in one day, right? So if this happens over the first part of the year, and you can really figure out what is changing or what has changed, then you've got something really good to work off of, and we do too. So major area, your family, right? Are there going to be any changes as far as, are you in those childbirthing years? Are you having kids? We know kids are expensive. Are you adopting? We know adopting is expensive. Hot ticket is college planning. So, when you think about, how many things can change in your kind of family, and how that affects your bottom line, and how you need to plan for, not only the current year, but future years. There's a lot of variables there, right? And, taxes come into play, benefit elections at work, estate planning and life insurance, as your family expands, you're going to want to protect them, right? If you can't self-insure, because you've got $1 million in the bank, well, you probably want to protect them with term life insurance, and these are things that you need to be thinking of and reviewing on an annual basis. Because your family, I consider them my most important aspect. So I think a lot of people would say the same. So we bring that one up first, but definitely, go through it, and it doesn't have to be one of these questions. You might think of something completely different, right? But that's where these questions lead you, is to, what adjustments am I going to be making because I'm having a new child, or buying a house or moving in with someone, whatever it may be, where's that leading to? Let's go on. Goals, right? So goals can be kind of general, but it's up to you to make them as specific and as specific as possible, because I think you have a really good chance of achieving them if you do that. But a lot of these goals that they've listed, how have they changed? Are you planning a vacation? You're going to make a big purchase, renovation, you're going to move. This is going to get your brain thinking about cash flow, right? How am I going to designate the funds that I make on a monthly or biweekly basis to fund these goals? A lot of what we do in retirement planning is we consider a lifestyle or a goal, and we create the cash flow to support those. So as you're working and as you kind of create these goals, how are you going to support funding these goals? And if they're really important to you, that's what you need to figure out. Your business. So business owners, we work with a large amount of business owners, especially here in South Carolina, and there's a lot of considerations when starting a business, specifically, what's it going to take to start a new business? Who's going to help you, right? Who's going to be your advocate? Do you have, good people in your corner that are going to help you and advise you through this process? Existing business owners, you've got to have that same group of supportive people in your tax, in your finance, and insurance that make your job easy so that you can focus on the strategy of your business. So, for example, when we work with business owners, we're going to help them with their 401k, their retirement plan, right? Are there going to be changes to the headcount that's going to impact the benefits available to their employees and to the owner? So, that's one example. Key man insurance, buy-sell policies, things like that, where they're worth reviewing as the business valuation changes, because you certainly want to have adequate coverage on that front. And just making sure that you have that trusted ally in making some decisions, right? Our clients will come to us and say, hey, I got an offer to sell my business, right? And I'm still running the business. Can you take a look at this and see, what all this means for me? So having, a good financial advisor, planner to really dig through that with you is very valuable. But these are questions, starting a business, maintaining a business, even shutting down a business, right? What changes come of that, right? So we think about who this applies to and what they'll be thinking of after they kind of check yes to one of these. Your work, right? We all work. If we don't, we might be a little bit more fortunate than others, but most people work. And when we go through these questions, are we going to have a job change? Are you worried about job security? Are you going to get a raise? Are you going to have a new match in your 401k that's available to you? Is someone going to retire? These are going to get you thinking about lifestyle, right? Because you want to protect your lifestyle, or you want to make sure that you can fund goals and fund, your lifestyle choices. But, other conversations that we have with regards to work and kind of the financial aspect, or the impact on your financial life are, if you've changed jobs, do you have a rollover, right? I've got this old plan. I've been meaning to do something about it. Well, let's dive into that. Let's see what exactly needs to change, if something needs to change. Are you taking advantage of all the benefits available to you at your workplace? Tying in family to work, you had more children, or you had a new baby, and you've got to pay some hospital bills, or you've got more expenses associated with that child, and we know the first year of life has a lot of doctor's visits. So is an HSA available? I'll talk about this a little bit more on the next slide too, but what else can we be doing to make sure that we're not leaving any money on the table, right? It's easy to say if a 401k offers a match, to make sure that you're contributing enough to capture that whole match. But to take it a step further, if you're participating in, if there's a dependent care flexible spending account available to you, right? And that child is going to go to daycare, well, that's a great way to kind of funnel some pre-tax dollars to offset the cost of daycare for a new child. So a lot of things to think about. Not, one kind of key area doesn't have to be isolated, right? There's tons of overlap, and that's why you have to get organized and start to look at the big picture. We call that holistic planning. Next one is health, right? So health, fitness, it's all so important, and it can all change in an instant, right? So does someone have a serious illness? Do you have the right health insurance? Are you approaching Medicare, right? Are you turning 65 this year? Do you need help finding that next ally or person, insurance professional, whomever it may be, that's going to help you with your supplement? Do you have an older family member that might need some caregiving, right? Or someone that you need to bring into the conversation for yourself, because maybe you're realizing that you're getting more forgetful, or you just need a hand from a child or someone else in your family who you trust to kind of maybe be a power of attorney, or someone that can help you in some of your decisions. I think that what these questions do is they start to kind of guide you towards, well, do I have the right health insurance? Do I have adequate life insurance? Do I have adequate disability insurance? Coming back to lifestyle and kind of goals. Well, am I a single income household, and my income is crucial to maintaining that lifestyle? Well, disability insurance is probably one of the most important forms that you could get for yourself, outside of just some term insurance, but to continue to make sure that the family's supported and the lifestyle can continue. For older individuals, really for anyone, we love health savings accounts and HSA. So if you participate in a high deductible insurance plan, with a moderate, out-of-pocket cost, you can potentially participate in an HSA or health savings plan or account. And it's just a savings vehicle. But the key to it is you put in the dollars on a pre-tax basis. So they can either come out of your gross pay, or you can get a deduction on your tax return. And then from there, they go into an account like an IRA, and they can become invested if you don't have an immediate need or short-term need for them. So they can potentially grow. So they've gone in tax deferred, meaning no tax was taken out of those dollars. Then they can continue to grow tax deferred. And then when you have a qualifying expense, and early in life, that could be a medical visit, surgery, really anything, dental, orthodontia, a number of things apply. that's a qualified expense, and those dollars are used tax-free. So they leave that HSA and they go, to whomever you're paying tax-free for you. Later in life, once you're Medicare eligible, they can actually be used to cover some long-term care premiums, and that's extremely powerful because those that can be costly insurance later in life. But it's a great savings vehicle. We love saying that it's triple tax advantage because you get a benefit on the way in. It can grow tax-free, and then you use it tax-free. So there's very few ways to invest that you get that type of tax treatment. So I love to put an emphasis on that. It's worth, maxing out on an annual basis just to have that bucket of that bucket of money later in life that's available to you, because it is very powerful. Let me move on here. Your money, right? So people think finance is, financial planning, investment management, whatever it is, all the terms are synonymous. It's your money. And it's kind of general financial planning. But what I think and what we really feel is, it's about your behaviors, right? We become good investors when we participate in our company's 401k. Because what that's doing is it's building a good habit. It's happening in the background. It might not represent, it may represent a small amount of your worth, or it may represent a majority of your worth. But what it does is it builds a really good habit of putting money away for a very long-term goal, starting out, and getting it invested, right? Trusting that process and building on that annually. Part of your annual review should be, am I maxing out my retirement? And am I maxing it out in a thoughtful way, right? Because you can go into that and take it a step further and say, do I need to do this on a pre-tax basis, right? Traditional, where you put the money in tax deferred, and when you take it out, you pay your tax, but you're in retirement, so potentially in a lower tax bracket. Or do I put my money in after tax from my net pay and pay tax today and never pay tax again? Protecting myself from, policy change, tax reform, whatever it may be. There's benefits to both, and there's not one answer to give everybody, but we like Roth. But it's that behavior of, I've got my saving on autopilot, and I'm doing a good job with it, right? And it doesn't have to be that you're putting a tremendous amount in or maxing out that benefit to you, but doing that on a regular basis will add to your success in the long run. And revisiting it annually, and I think I touched on this but didn't go far enough. Considering maxing out or contributing the most that you can to a retirement plan. You don't have to get there overnight, right? That can be incremental. As you get a raise at work, you maybe put another % of your paycheck towards that benefit. So, so things to think about. But your money, you've got good habits saving at work. Those become good habits saving for college education, tackling debt, putting away excess funds that you may have after all your bills are paid to invest in a brokerage account, right? So just thinking about your money and kind of how you want to kind of carve that up and invest that and apply those dollars. But it doesn't stop there, right? Because there's other ways to kind of look at where your dollars are going already. It helps to have a good budget, but most people's largest expense is their mortgage, and interest rates aren't at a great place right now. But we had plenty of conversations when they were below 3% of is this a good time to refinance, and what should I do as far as my house and buying a new one and the mortgage. There's plenty to dive in on as far as that goes. Next slide is your estate. So we are fortunate right now that the estate tax limit is very high. So most individuals are not going to have a taxable estate, but for those who who will fall into that category, and are fortunate to have a large net worth, there are strategies and there are, again, great professionals to surround yourself with, to make sure that you're prepared today for, that next phase, or that asset transfer to your heirs. So, it won't apply to everyone, but we always say, with estate planning, it's good to have everyone on the same page. Your CPA, your advisor, and your attorney should all kind of be in the loop on those conversations. And I think it's worth mentioning, safety deposit box. If it's not free to you, I don't think you have to have one, right? There's enough great ways to kind of securely store important legal documents. What we use for a lot of our clients is our vault. That's available on our client website, and it's a place where we can store tax forms, estate and legal documents, and we find it's very useful. So don't feel like you need to maintain an extra expense to keep a copy of your insurance policy or your whatever it may be. So that's just something to note. Oh, I do want to mention one other thing. So as far as estate goes, beneficiaries are always so important, and we love to just harp on this, but it's the easiest thing that you can forget to do. But naming beneficiaries on accounts that allow it, brokerage, IRA, anything that you can put a transfer on death, any kind of beneficiary designation, it is so beneficial to do that, because it saves your loved ones just a big hassle and a potential, process with probate, if you go ahead and put that work in today. And you can change that at any time. And that's part of an annual review, right? Making sure that your beneficiaries are up to date, because you may have set this up, before marriage and have a brother and a cousin listed, but you need to, probably list your spouse now, or have an awkward conversation. But that and updating your will, great thing to just touch on annually. Doesn't take a lot of time. You don't need to, go sit down with an attorney to do so. You can just kind of, get a feel for it and see what you might need to do there. Retirement. So this isn't going to apply to everybody now, but those who, might be transitioning to retirement, had a job change, and now considering a rollover, potentially borrowing funds from retirement. Sometimes a loan is the right answer, but not it's nothing to lead with. What's your savings rate? And I've touched on some of this throughout, but knowing what you're doing and getting to that point where you're really contributing a large amount to your retirement is beneficial, because that is what's going to have the biggest impact on your bottom line. It's not going to be, the amount that your employer will contribute will help. But it's not going to be picking the perfect, mutual fund or investment option in the plan. It's going to be how soon you start and how much you save. And then ease of management, having everything in one place tends to provide the best scenario for investors and participants. It's not always the right answer. If one plan costs more to participate in than another, and the difference is, more than, I'd say a few basis points, which is a fraction of a percent, then there's value in staying put. So that's where we'll provide analysis and say, here's what's best for you. And then we get some input as far as, well, I'd rather pay the extra cost, or, I'd rather have everything in one place. It's not all so analytical that it's, dollars equal cents. We kind of welcome that conversation and say, what do you want? So that's kind of how we navigate some of that. Just making sure. So as far as retirement goes, I've mentioned Roth as far as contributions, but part of ongoing financial planning, retirement income planning, Roth conversion and Roth contribution analysis. That is going to play a huge role in what your retirement looks like, because it may hurt today, but it may benefit you more than just a regular pre-tax or traditional contribution would. So again, very individualized advice, but if you can get to retirement with a good blend of before tax money, after tax money, as far as your qualified investment buckets go, you're going to be better for it, and have a lot of flexibility in terms of tax and everything associated. So we think there's a lot of value in that. We know there's a lot of value in that. Retirement is a slide that we could talk about for a really long time. So again, I'm sure we'll have another webinar or episode on retirement specifically before the year's over. Your future. Do you need help getting financially organized? A lot of the value that we provide as a financial advisor, certified financial planner, is bearing that organizational stress load, right? I mean, we need data from you. We need, some information, but once it's up and running, we stay organized, right? Thinking about your future though, and these questions are a little bit, scattered, but do you have an emergency fund, right? We just talked about 401k loans being an option, but not always the best one. Do you feel safe that if your income stopped for any reason, you could get by, in between jobs, whatever it may be, without having to dip into a retirement plan and potentially paying a penalty? Do you anticipate any life changes? Thinking about, whether it's being stressed or whatever it may be, just always keeping that at the forefront and having someone to talk to about your future is important. Applying for Social Security, we love diving into this because that is part of your retirement income plan, and when we go through that process, we're going to optimize when you and potentially your spouse take Social Security, because it's for a lot of people, it's the majority of their income in retirement. So there's a big emphasis on when is it going to be most valuable for me to take that, and lifespan, health considerations weigh heavily on that, and earnings history, right? So, I could give you a preview of that, but I'm sure we're going to have another episode on that. But it typically comes down to, how's it factor into the retirement income plan, and kind of what we're projecting for your retirement, and, how long do we anticipate living in retirement, and what are the benefit bases, right? Who had a higher earnings history of the married couple, whomever it may be. So there's a lot of things that we expand on that question. Again, very individualized advice, but just thinking about your future and your goals and your finances. I have mentioned it 10 times, maybe once for every slide on this today, but this is an annual review, right? And when you're working with a planner, we're thinking about this even more often. We might be presenting it to you on an annual basis, but it's that input, right? So whether you work with a planner or not, you need to be crafting these goals, revising these goals as your situation changes, and on an annual basis, because it's important to your situation, your families, and it doesn't just have to be that most pressing issue like, I keep getting letters about my old 401k, I need to roll it over. It's, everything, right? And we discussed a little bit of everything, and I hope I didn't blabber too much, but as far as next steps go, if you like me and you'd like to talk to us more, we're always happy to have a conversation. Obviously, we'll be sending out some materials. This is recorded, and our website has a number of these available to view anytime. I think it might take you to YouTube too. But next steps are really just going to be, identify what you want to continue that you're doing now, what you want to stop, and what you want to change, right? So keep that, conversation going. And if you feel like you would benefit from working with us as a financial planner, financial advisor, however we can help you, we'd love to talk more about that and review your checklist with you. So with that, I will open it up to questions, but they better be just the best. I'm looking for the best questions here. Check the chat. Pete has told me that I definitely need a sweatband next time. So we'll get that noted and ordered. But I will hang out. I think we have gone about 30 minutes. So I talk too much, but that's okay. And I'm going to hang out and see if any questions trickle in. But if not, we will be available. And our contact information is on our website, on our social media. Happy to talk to anyone who would like to follow up on this. So thank you again. All right. So I drank some water. I got hydrated. And after all this fitness, we checked the reel. There's not a lot of questions. So we are going to end it now. And we will address those questions, on a one-on-one basis. But if you do have questions, feel free to email us, contact us again, and we'll look forward to the next one of these. Thank you, everybody.